Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have the CEO, Brad Douville from Greenlane Renewables. Greenlane trades on the TSX Venture Exchange under the symbol GRN and on the OTC under GRNWF. The company is currently trading at 48 cents with roughly 152 million shares outstanding, or about a $73 million market cap. I'd now hand it over to Paul Andriola.
Hey, thanks a lot, Trevor. Great to have Brad with us today. Brad, Greenlane Renewables, this is a name that actually quite a number of our members have asked us about. And I know a little bit about the business because of your colleague there, Darren, and just generally, reviewing financials and things like that. So happy to have you here. Important, clearly, to understand more about the business. So I know you've got a presentation and you're going to give us a real good rundown on what the business is all about. So Brad, I'm going to hand it over to you and then follow up with some questions.
Yeah, great. Thanks, Paul. Thanks, Trevor. Let me just queue up the presentation here. Helps if I hit the right buttons. Okay, so let me take you through Greenlane Renewables, and let's start with, well, firstly, I'll be making some forward-looking statements, so please take caution. And I'll start with characterizing the market in which we participate and what we're trying to accomplish. So really what we're focused on is the decarbonization of energy systems around the world, in particular, the natural gas energy system. So renewable natural gas is to the natural gas grid, as wind and solar is to the electricity grid. And what we're focused on are two of the largest and most difficult to decarbonize sectors, that being commercial transportation and the natural gas grid. In the case of commercial transportation, it's displacing diesel fuel going into heavy duty trucks. In the case of the gas grid, it's displacing fossil natural gas. Going in with renewable natural gas, which is a drop-in replacement for fossil natural gas, so it can do the exact same job. It's chemically identical, but it's either carbon neutral or carbon negative. What do we do as Greenlane? Well, we're a market-leading provider of the technology that does biogas upgrading. I'll explain what that is. And our systems produce clean, low-carbon, renewable natural gas from a variety of different organic waste sources. Could be landfills, wastewater treatment plants, dairy and hog farms, food waste, and it's all suitable for injection directly into the gas grid. Just some key highlights here. We are a pure play in the RNG space. We're solely focused on RNG. We think it's the growth opportunity that we should be focused on. We are growing extremely quickly. We had record revenues last year. 55 million. That was an increase of 146% over the year prior. We just released our recent quarter, Q3. That was another record revenue quarter for us, nearly 20 million. We are the largest global supplied capacity in the industry. So that's over 135 systems sold into 19 countries. We have over 30 years of industry experience. That said, we went public in 2019, the middle of 2019, we listed on the TSXV, and then within 18 months, we graduated to the main board, the TSX. Currently, our sales order backlog, as at the end of the quarter, was 37 million. We have a sales pipeline valued at 900 million. That is our opportunities list, our quoted opportunities that we're looking to translate into firm contracts. In addition to our core business, which has healthy gross margins, we have expanded into a recurring and revenue and profit model through what we call deployment of development capital. I'll explain what that is. We use an asset-light model within the business, retain all the IP within the business, including patents and trade secrets and know-how. What we're looking at is a 90 billion total addressable market for biogas upgrading equipment. And that's underpinned with significant market drivers, demand from governments, utilities, corporations, consumers, all looking for low carbon and carbon negative solutions. So let's start with what a typical renewable natural gas ecosystem looks like. It's a bit complex. It's a bit more complex than what we might find in a wind or solar project, but does have some similar characteristics where there's developers involved, there's project owners involved, there's project finance, and there's off-takers. In the case of biogas, we need feedstock. So that's shown on the left side of this graph. That could come from a number of different sources. The most typical ones, landfills, wastewater treatment plants. Those are all over the place in most municipalities, all municipalities really. There's other feedstock sources such as food waste streams with growing organic diversion mandates to divert organic matter away from landfills. We have dairy manure projects and hog manure. These are all organic matter that you collect, put into a digester, creates biogas, which is roughly a mixture of half carbon dioxide and biomethane. It has other trace impurities, and that's what we do. So we come in, we clean up the biogas. We first separate out the impurities, hydrogen sulfide and volatile organic compounds and some other things. And then we separate the carbon dioxide from the biomethane, create high purity biomethane, which gets injected directly into the pipeline. Again, it's chemically identical, but without the carbon dioxide, or at least without the new, it adds no new net carbon dioxide to the environment. Depending on the feedstock source, it could be carbon negative. So for example, if you're collecting dairy manure, then you're preventing raw methane from escaping into the environment. A typical dairy manure project could have what we refer to as a carbon intensity of -400, which is basically the equivalent of removing 5 diesel trucks from the road to power one RNG powered truck. So that's the kind of carbon negative impact that we're talking about here. Total addressable market, we run these numbers once a year whenever the reports come out. So this particular data set comes from the International Energy Agency. It wasn't until the last few years that they started actually projecting or including in their forward-looking projections biomethane. They have, and they've been doing that for a couple of years now as the industry is getting its awareness and toehold. And so what is being projected, of course, we have net zero by 2050 announcements and programs in place to get there. This particular data set shows that to reach roughly 4 to 5% of today's current global natural gas consumption, so 4 to 5% of that consumption being serviced by renewable natural gas, that represents an estimated 90 billion in biogas upgrading equipment sales. So that's what we're looking at in terms of the total addressable market for Greenlane. In addition to our core business of selling the equipment that does the biogas upgrading, we have launched this year formally what we refer to as deployment of development capital. So what this is most of our customers are developers. This is pre-construction phase when they're putting together the feedstock contracts, the offtake contracts, getting the land secured. They're talking to us and looking for advice on the technology to do the upgrading, looking for quotations. So we said, well, I think we can add more value to the marketplace, and we can also address the issue in the industry, which is largely origination. So I showed the projections going forward of the total addressable market. RNG is think of it as a market that essentially has unlimited demand, but what's pacing the growth is really the origination of quality projects. So that's the part intention of this deployment of development capital, is to work with developers it's a very fragmented space. It's inherently local. You have to work with the local feedstock provider, the local pipeline company. We will, from our balance sheet, put up at-risk development capital into these developers pre-construction so that they can accelerate their projects to the ready for construction phase. That will secure the Greenlane systems and services into the contract, and also provide Greenlane with a profit or an equity interest in the resulting project. So what we're trying to do here is to make sure that we can add value, not compete with our customers who are project developers and project owners, whereby our vision is that rather than own a whole bunch of projects that's capital intensive, instead, in this case, we have a small participation, equity, economic participation in a large number of projects into which we sold our equipment. We've launched 2 projects this year with the deployment of development capital. One's a dairy cluster model in California, and another's a landfill gas to RNG in the eastern US. Let's talk about some of the drivers in the industry. So what drives the RNG space is 2 main verticals, as I mentioned. So one's commercial transportation, and the other is the gas utilities. So firstly, starting with the transportation market, this is driven by the longstanding RFS and LCFS in the US, for example. So the RFS, the renewable fuel standards at the federal level, low carbon fuel standard at the state level. California was the first to launch the program. It's over a dozen years ago now. Oregon has one, Washington, other states, Canada has one. So these are generating carbon credits. They're fungibly traded. That creates the value. Just to give you a sense of the kind of value that we're talking about currently, if you were to do a dairy manure project, or let's start with a landfill project might be worth in the order of, say, $35 per MMBTU. A dairy project that's avoiding raw methane from escaping into the environment, that might be more like $75 per MMBTU. As a comparison, think of Henry Hub pricing at $5. So that's the delta really is paying for the environmental attribute to decarbonize. That's what's highly sought after. That's what these programs are designed to do, is to drive renewables into the transportation fuel mix and decarbonize. We have similar programs in Europe with RED2. RED3 is coming shortly, but it has the same fundamental drivers. Additionally, we have in North America the gas utility market. So think of it as an alternative market to the transportation space, whereby the gas utilities, for them to compete with their electric utility counterparts, both servicing the same end customers, which is homeowners, buildings, and factories, where it's for energy use, for heating and other uses, then the electricity grid is much further ahead in decarbonization. So that the gas utilities have to catch up. The way they can do that is through renewable natural gas. We have some of the leading gas utilities in this space, certainly the ones that are facing the most competitive pressure on providing a decarbonized solution. We have FortisBC, SoCalGas, Northwest Natural, Énergir in Quebec. These are all targets, or in some cases regulation, that drive 10 to 20% of the gas network in that relative geography by 2030. So we're at 10 to 20% RNG in the network by 2030 by some of these leading gas utilities. So that's an enormous amount of gas. Someone like FortisBC, they're projecting that by 2050 there'll be 75% in the British Columbia network. We have some more recent examples of underpinning positive movements. We had the IRA passed into law this year in the US, the Inflation Reduction Act, which is really a climate change piece of legislation. That's being codified now by the Department of Treasury. That will be launched early next year, and that's going to provide up to 40% investment tax credits for biogas projects, which is all very positive. We also just saw recently in Europe, with the move away from Russian gas, launching of a new program, in this case in Italy, 4.5 billion in funding from the EU to Italy to launch their biomethane program there. That provides a 40% subsidy for the capital or the construction costs of projects, plus a feed-in tariff mechanism. So what's happening in the industry? Let's take just a quick spin there. So all the oil and gas super majors are all heavily involved, or most of them are heavily involved in RNG. The reason being the core of their business is to provide liquid fuels for transportation markets around the world. And RNG, because it figures prominently in the transportation space, is something that they're all very interested in as they grow their renewables portfolio. So amongst them, they're either in joint ventures or either directly investing and developing projects. Hundreds of millions of dollars are going into the development of these projects, and they represent an important customer set for Greenlane. We have end users like Amazon who have large fleets of vehicles across the world. So they've got, for example, recently announced orders for more than 1,000 natural gas or renewable natural gas trucks for both the North American market, another 1,000 for the European market, and signed long-term RNG agreements. Clean Energy is an example of a company. They currently are the leader in the United States for fueling stations for natural gas. They've said that by 2025, they'll dispense 100% RNG. They're well on that track to switch over from fossil to renewable natural gas. C-SPAN, just an example of moving beyond heavy-duty trucks into the marine sector. We are seeing some consolidation in the industry, so we view this as positive. There's been some recent, within the last number of months, some big deals. So BP purchasing a company called Archaea Energy for $4 billion. That gets BP a launching pad to scale up RNG for their investments and their offtake. Nature Energy, a Danish-based leader, put themselves up for sale. Shell is rumored to be in that bidding process. That transaction could be worth around $2 billion. We've had a number of other consolidation moves in the industry. We think that's positive, further scaling and sophistication in our customer set, the people putting money into projects and owning the projects. Okay, well, a bit of a technology overview from Greenlane. So I talked about biogas upgrading and what it is. So these are the different systems that we provide. I mentioned that we are 100% focused on renewable natural gas. So what we did with the business was instead of having one technology that we look across multiple verticals, we said because we're focused on this one critical vertical, we want to bring the most compelling technologies to RNG. And we did that by offering water wash, pressure swing absorption, and membrane separation. The company was founded 30 years ago, the first to commercialize the water wash principle. We're the market leader there. More recently, we added pressure swing absorption and finally membrane separation. The reason we have 3 different technologies, and by the way, there's 5 different ways to do this. The 2 that we don't offer, one is chemical scrubbing or chemical wash, which is similar to the water wash, but it uses chemicals, which we don't offer. And finally is cryogenic. Cryogenic isn't necessarily scalable down to the size of a biogas project, so it tends not to be used in the industry. The reason we've brought these 3 compelling technologies together under one roof, a number of reasons. Firstly, there's not one right answer for the spectrum of different kinds of biogas projects out there. They're looking to create biomethane for pipeline injection in different geographies around the world. We have smaller flow projects, higher flow projects. We have digester gas, landfill gas, and then a variety of pipeline specifications. So all these things are inputs to define the technology solution. And if you don't have multiple technologies under one roof, you're going to not be able to service the whole market. And that was our ambition, was to be able to be the most complete provider of biogas upgrading equipment for the right kind of projects around the world. The way that our customers look at us and look at our competitors is they want, obviously, price matters, price and performance. So we're talking the lowest initial price, the lowest ongoing operating cost, as well as the performance metric for us is methane recovery. So you want to obviously retain retain the maximum amount of methane coming into the raw biogas going into the product gas. We recently completed our first M&A transaction, which was to bring in-house compelling biogas desulfurization products. You can see in the blue where that fits into our various different technologies. Every biogas project has sulfur in the form of hydrogen sulfide. It has to be removed. It's not allowed to go into the pipeline. So this was an important piece of technology that we found. An Italian company called Airdep. They had about 10 years of experience in selling about 90% of their products in Italy. So we felt that was a strategically important acquisition for us for a number of reasons. We could take them global. It also gives us an important footprint in Italy, which is an attractive supply chain location, as well as a very dynamic biomethane end use market. So it gives us an important foothold. I mentioned that we've sold globally. We've been at this for quite a while. Over 135 systems sold into 19 countries. And we've also been a real pioneer at this. So 12 of the countries in which we've sold, we were the first to provide a biogas upgrader. So although this market's been around for 30 years, it hasn't really been around for 30 years. And what I mean by that is it's just really within the last few years where it's really taken off. It's gained awareness more globally, and that's evidenced by the the kinds of transactions we've seen lately with the big oil and gas players and the large gas utilities. We have a number of reference examples. So Greenlane's known for some of the biggest facilities in the world. So here's a couple examples of those. Güstrow, Germany, that's a crop-based project. The larger ones tend to use our water wash technology. These are both water wash examples. So that's 10,000 normal cubic meters per hour. Montreal is a landfill location. Just to give you a sense of size, if you compare this to a conventional natural gas well in the Western Canadian Basin, this would be about 10 times that size. These are roughly 10 times the average biogas upgrading facility. So in other words, an average size biogas upgrading facility is roughly the same size as a conventional natural gas well in the Western Canadian Basin. However, it doesn't decline in production like a natural gas well does. We're also known in the industry for some of the most more challenging projects. We're proud to have been early in the California market, working with the regulators there as they were developing their fuel specification, pipeline injection specification. We were the first to meet it with a commercial scale system. They've since relaxed it to enable commercial deployment in large volumes. SoCalGas in particular has a mandate or a target of getting to 20% of their network onto renewable natural gas by 2030. Also shown here is a liquid example. So this is where you take the resulting biomethane, you liquefy it because it goes into vehicles directly, which is common throughout Europe. I mentioned that we use an asset-light model. That's been deliberate to allow us to scale quickly, to have production locations near our customer set, sold in 19 countries. So we have select trusted manufacturing fabrication partners around the world. We source components globally, but within the business, we have all the deep expertise, competency, and intellectual property. Quick look at the competitive landscape. So what we're seeing here are active competitors who sell globally. You might recognize some of these names. You can also see on this chart, we are unique in the space as the only one who offers multiple core upgrading technologies. All of our competitors offer just one. I think it's fair to say that Air Liquide is probably our closest competitor. We mostly see them in the US, although they are in other jurisdictions. Wärtsilä, based out of Finland, a global player. Protoval, VMT, Bright, European-based players who are moving into other jurisdictions. Greenlane's been at this a while. When we started, Europe was the main focus. We've since shifted to headquartered in Canada to be close to the North American market. That has turned out to be a high growth market for us, and Latin America is the next big growth market for us. Quick look at the financials. So the revenue growth has really been exponential for us in the last number of years since we went public. 2021 revenue, 55 million, and that's 146% greater than 2020. Our gross margins currently are around the 25% range. In the most recent quarter, just under 20 million, 25% gross margin, positive adjusted EBITDA of around 2%. Order backlog 37 million. The sales pipeline 900 million. So what that I should say also that the way we do our accounting is because it's project based. When we secure a new contract, which for us could be anywhere from say 2 million to 20 million, those contracts are delivered over anywhere from 9 to 18 months. That means that we do percent completion basis accounting, which means that we'll recognize that contract value over that 9 to 18 months. When we sign the contract, it immediately goes into the backlog. So the backlog of 37 million, what that represents is the remaining balance in our signed contracts that will be translated over time into revenue. Going forward, when we sign new contracts, the contract value immediately goes into the backlog and rinse and repeat. The sales pipeline is a visibility of roughly 2 years. So those are opportunities that our sales team is working through the sales funnel to get into a contracting situation. And as soon as those are contracted, they go into the backlog. The balance sheet, so currently sitting on about 21 million in cash and no debt in the business. The capital structure, just over 150 million shares outstanding, fully diluted, just over 160 million. Insider ownership around 12%, and our most recent market capitalization around 77 million. Quick comment on senior management. I've been with the business for 5 years. Prior to that, I had a 25-year career in the natural gas commercial industry, which was quickly moving to renewable natural gas. So a real continuum for me to move over to Greenlane. Monty and Alex recently joined as CFO and COO, respectively, both with decades of experience and have been bringing great value to Greenlane on the management team since they've joined us. So just a quick sum up, and then we can get into some questions. So we are a pure play in the space, rapidly growing. We are the largest global supplier in our sector of the biogas upgrading equipment sales. Strong sales order backlog and pipeline. Our core business generates healthy gross margins. Combine that with expanding into our recurring revenue profit model with our deployment of development capital. We are unique in the space where we are the only one to offer the 3 main biogas upgrading technologies. Again, we did that to bring into this one sector of renewable natural gas the most compelling technologies and providing value to our customers. We are looking at a total addressable market of 90 billion, and the underlying dynamics that are driving and underpinning the market are very strong. So these are customers looking for decarbonization solutions. That is a trend that's not going away, and that's what we're building the business on. So with that, I'll pass it over.
Fantastic. Thank you so much, Brad. One question sort of came up while you were talking there, and you touched on it a little bit, but the end pricing for RNG, you mentioned, I think, $35 to $75 per MMBTU. What really determines that? How much is that sort of market pricing, and how much is that driven by other things that get to that price?
Yeah, so those 2 numbers that I gave you, that's solely for the transportation market in the US.
Okay.
And that's under the two transportation programs, the RFS at the federal level and the LCFS at the state level. So the way that those numbers are arrived at, firstly at the federal level, it's binary. You have either what's called cellulosic biofuel or non-cellulosic biofuel. RNG is unique. It's the only one that qualifies as cellulosic, which is the higher value of the what's called the RIN credits. Mm-hmm. In the LCFS, it's a bit different. It's formulaic. So you look at the total life cycle cost or the life cycle carbon generation throughout the value chain of the project. That goes into a model. You calculate what's called a CI score, carbon intensity score. RNG provides the deepest carbon cuts of any alternative. The alternatives could be renewable diesel, could be corn-based ethanol, could be electric for electric vehicles. So RNG is the lowest. That maximizes the value under the carbon credits. Both situations, they're fungible. So the RINs, the LCFS credits, those are fungibly traded. And that's what generates these values. So they do fluctuate, there's volatility. And then what I didn't mention, for the gas utility space, you can sign long-term contracts, 15 to 20 years, whereas the transportation space, those pricing, that's spot-based pricing. So if you sign a 15 or 20-year contract, albeit with a AAA rated counterparty, that would be at a lower price. But then you have different bankability options for the project finance.
Gotcha. I want to remind everybody that's listening, as always, if you guys got any questions you'd like me to ask Brad, please use the chat function and we'll do our best to ask as many questions as we can. I mean, a lot of this is clearly driven by carbon credits. The customers that are buying these systems, can you give us a sense of what the economics look like, including all the different factors that come to play? This is, clearly some of this is not, there's some government incentives, there's a carbon credit piece as well. But what are the business economics look like when a customer is buying one of these systems?
Yeah, so typically the customers would do project economic accounting. So typically an IRR would be their core metric. So, we'd be looking at unlevered IRRs of, anywhere from mid-teens to mid-20s, depending on what the feedstock source is and what which regime they're selling the RNG into. In some cases, we might see paybacks of, as quick as a few years to, perhaps, more like maybe 7 or 8 years, depending on what the circumstances.
And I mean, energy prices have gone crazy. The volatility in energy prices. Are you guys affected at all by the ups and downs that we're seeing in the sort of the typical fossil fuel market?
Well, I can say the craziness is predominantly in Europe, of course. And one thing that I can honestly say that we never expected, or anyone in the industry expected, where we would have never expected the commodity cost to be higher than the price of the environmental attribute. So those examples I gave you of 35 to 75, the bulk of that is the environmental attribute pricing. Right. In Europe, we have a situation now where the commodity cost, because it's just so ridiculously high, is actually higher than the value of the environmental attribute. So that's helpful because you get that plus, and so that's really caused a bunch of activity in Europe. In addition to what the European Union is trying to do, they've publicly stated that their ambition is to increase by 12-fold the biomethane supply into Europe from 2020 to 2030, with the ambition of getting off Russian gas by 2030.
Yeah, no, I recognize there's a sort of safety of supply component that comes to play here, especially in Europe when we've seen what's happened. Having the ability to have your own sort of in-house source looks a lot more appealing than it would have, a year ago, we'll say. Brad, I mean, clearly the business better than we do. What challenges do you face sort of on an ongoing basis? What's the hurdles, or what keeps you up at night running the business?
Yeah, for us, there's never a day without a challenge. I mean, obviously, we all know about global supply chains, inflationary pressures. Let me touch on those because that's top of mind for everyone. So firstly, with supply chain, we've been pretty successful navigating through that as things really crunch down. We're not immune, just like anyone else, but I think we did a good job of skirting through that, and that's evidenced by our gross margin performance, which I think is indicative of whether it impacted us or not. We have been quoting some longer lead times as a consequence of that. We do expect when we work through this, we'll be back to shorter lead times. However, having said that, we won market share away from some of our competitors who experienced more pressure with longer lead times. Electronic components, in some cases, that is factored into our equipment. It is highly engineered systems that require electronic components, but we're working through that in a number of different ways. As it relates to inflation, another top concern for folks, the way our business works, being asset light, is when we sign our contracts with our customers, we tend to be somewhere in the order of approximately 80% of the bill of materials are contracted through our supply chain partners. So we're not stuck in the middle holding the bag during increased inflation. So we're kind of locked in. We manage the rest, that 20% as we go. So that's been helpful. And again, we look back as inflation hit us over this year. Before this year, there was a long time before you had to consider inflation. And again, we've had consistent, solid gross margin results that hasn't negatively hit us. And then the other key thing that's a challenge for us and a challenge for anyone growing so quickly is just building the business, bringing in the talent, making sure our systems and processes keep pace, which to be honest, they're not. So that's an investment, additional investments we're making now. If we look back just in the recent history, 2 years ago, we were a much smaller business. We've outgrown our systems. Good problem to have. So, those are the kinds of things that we're working on now.
Now, a $21 million on the balance sheet. You guys are EBITDA positive now. What can investors expect you're going to do with that cash? How much do you really need to run the business, and what do you do with any excess if there is any?
Yeah, our working capital needs in the business are quite low. So the cash in the bank is mainly for two primary things. So one is M&A, and the other is our deployment of development capital. Think of it as roughly half between those two things. I mentioned our first M&A transaction that closed in February of this year, AirDep in Italy. There's two kinds of M&A transactions we might do. So one is another technology addition, like AirDep, perhaps another part of the system. And the second type of M&A transaction would be a competitor or a certain geography that might give us some strategic advantage. We do expect, in the same way there's been consolidation in our customer set, there's likely to be consolidation in the technology provider side of things. So we want to be ready for that and out in front of that. So that's one piece of it. And then I touched on our deployment of development capital. We think that's attractive. I didn't characterize that for you in terms of a quantum. When we get into a contract like that, the two we did this year was a commitment of around $1 million each. Think of the construction costs for both of those on the order of $20 to $30 million, just to put it into context. So we're not talking a lot of capital up front. It is at risk, which demands a good return. Think of over time we would generate a 2x return on that capital and ramp that up as we take on additional orders and more uptake for that particular program.
Now, Brad, you mentioned insider ownership is 12% roughly. What do you think the makeup of the rest of the shareholder base is? Institutional? Is it mostly retail? What can you tell us about what you know of the shareholder base?
You want to take that, Darren?
Yeah, I can touch on that, Paul, if you like. And
Sure.
the institutional base for us right now is probably 30%, just under, on an institutional level. Obviously, when our share price for the last 18 months has been a tough market, and so some of the institutions just had to step out. And so right now it's been a large rebuild with some retail individual shareholder base. And now we just yesterday did some institutional marketing and seeing some interest just even off of that yesterday. So.
Gotcha. Now, looking as sort of an investor that's trying to take advantage of things here, your financing, the last financing you did, what price was that done at, and then approximately how long ago was that?
Yep, go ahead, Darren.
Yeah.
Sorry, yeah, I know it was about $2.17 in February, coming up 2 years ago this February.
Gotcha.
So February of 21, a bit more specific.
Gotcha. Okay, so again, opportunistically looking at this, it's a significant haircut from the price that a lot of the institutional money and financing or investors came in at. Okay, so Darren, maybe I'll ask this question of you. You're starting to see some interest from institutional investors. I think the ESG market, and partly probably because company like ZBAC having been hurt as much as it has. What's the sentiment like out there? Like, what are investors saying to you, and what do you see as the pushback as far as investing, not just in your company, but maybe the whole sector?
Yeah, and I've definitely been watching a majority of the sector, and I think what we're seeing is just there's a few stock charts that look like tax loss selling is underway, and by the same token, I'd say the recent marketing we did with don't mind saying it was Canaccord. This is the busiest schedule we've seen in months from a direct one-on-one request from institutions. So I think we had a few of the institutions, frankly, tell us directly that they've been sitting on their hands long enough, and now they're starting to look at opportunities. And just that, just the sheer number of meetings we had in a very short period of time is telling us that people are really paying attention, and they're looking at Greenlane, because again, it's almost painful. I think we actually have really good revenue growth, and we actually can make money. So
Clearly,
see
yeah.
our share price, feel the pain. It's tough, but we've been in the market long enough to know this is a seasonality, and we're just going to keep growing the business, and hopefully the institutional and investor base looks at it as an opportunity too.
Now, either of you can maybe answer this question, but so ZBAC was a bit of a poster child in Canadian markets, especially the microcap markets, for ESG and sort of renewable gas. Is there anything you've learned from what's happened with ZBAC? And has it changed anything in terms of how you're running your business, or maybe your investor relations or anything like that?
It hasn't changed anything. I think there are some important learnings as to what happened there. I think it's important to note that by the end of September, when they filed for the court process, they were down to 20% of their business was focused on RNG. Which is a bit puzzling for us, because we felt that RNG was really where the action is and continues to be. They did go big in terms of an acquisition ambition. So they bought a hydrogen generation company in Holland. In Germany, they bought a oxygen nitrogen generation company. So they really became focused on some other things that didn't quite work out. They weren't cash generative, and they got into a tough situation. From where we sit, it's never a good thing to have an industry participant get into trouble like that. So we don't wish it on anyone, but it is what it is. And I think if anything, it tells us that our strategy is working, and it's the right one. So to stay very focused on what we believe to be the most compelling market of RNG. We're doing that. We continue to do that. We are being prudent and pacing our M&A ambition. Our first one was fantastic. It's cash generative. It's in high demand. So I think it's, if anything, just reinforced that we're on the right track.
That's good. So in wrapping up, just a last couple of questions here, but again, from the investor standpoint, or us sort of looking in, what do you think are the catalysts, or maybe the metrics, financial metrics, that we should pay the most attention to sort of validate that you guys are continuing to execute on your business plan?
Yeah, I mean, in terms of catalysts on the share price, it feels a little bit right now in the market dynamics, it's going to be more externalities than internalities as it relates to our business. But in terms of markers for Greenlane, it's historically been new orders. That's something that people are watching from us. It's M&A transactions, and it's our deployment of development capital program as that continues to gain speed and popularity. So, those are the main things for us, and then any other transactions that might show up.
Gotcha. And then, lastly, just, is there anything that we missed, or is there any key message you want to make sure that everybody walks away with today about the business?
I think we covered most of it. I think, one of the things that we're seeing, and we've seen since going public in 2019, is that the foundation of the business has really strengthened. We took, a bit of a gamble going public when we did. We weren't quite sure that the time was right. I think we guessed, about right, just the pace of the awareness of RNG as an essential tool to decarbonize. We have COP27 going on right now, really emphasizing the need. The discussions has even evolved to mitigation, but you can never get away from decarbonization. Like, there's, out of any of the things that we must do, it's decarbonize. And so, I think we can take comfort in the fact that the underlying tailwinds aren't going anywhere. So really, it's just the pace at which we can together build this industry, and we see ourselves as an important part of many other industry collaborators, building this as we go.
Fantastic. Well, listen, great. We've been speaking to CEO Brad Douville, Greenlane Renewables, symbols GRN on the TSX. Always great to sort of get a story for the first time and get everybody to understand the business. Congratulations. You guys are obviously rapidly growing. Looks like you're just on the cusp of real profitability here, and very healthy balance sheet with a lot of cash. So a lot of good things to look at here. So we hope that one day in the not too distant future, we can have you guys back for an update. So thanks for the time today, and I look forward to the next time we can chat.
Thank you very much. It was a pleasure.
Pleasure. Thanks, Paul.
Thanks, guys.